Yo, yo, how are we all doing today? Yo, yo, let's see. Good afternoon, guys. I started the stream a few minutes early to make sure everything was okay. For everyone joining, please let me know that you can see the screen and hear the audio pretty good. It looks good on my side, but just confirm for me. I will give everybody a few minutes to hop in. I hope everyone's having a good, productive weekend. We actually have an interesting new schedule coming up this week where PPI comes out before CPI. Now, last month, PPI and CPI were very good to me. But because PPI had such a hot read last month, I believe that CPI this month is going to have a very, very negative impact to the markets because PPI is a leading indicator for price. That's the cost of producing goods going up, where consumer price index is the cost that we're paying on goods. Because PPI was so high last month, I expect CPI to start inching forward. And the labor market numbers were terrible. I actually think that's like a derivative why we're kind of in this range. I think price is going to stay in a range like this. If CPI doesn't get us out of this range, it's not going to be till the Fed funds rate. Thank you, Danny. If we don't get out for CPI, PPI this week, it's not going to be till the Fed funds rate makes their decision. The market is either waiting on the inflation data or it's waiting on their decision if they're actually going to cut rates. Perfect, thank you. I'll say I'm going to give everyone until 12:05 to start answering questions, but any questions you guys do have, you can put in the chat and I'll get to you guys first. What's up, brother? I'm glad this is working. This is actually the first time I'm doing a YouTube live, and setting up OBS was actually like the biggest fright of this whole process. It's not really full screen. Is it showing like the black bar on the right side? Okay. Let me see. Because that's, I have the OBS window up. Let me see if I can make it smaller. Or I'll do this a different way. 1 second. Okay. Is that better? Alright, I've given everybody enough time to hop in. So, as far as like this session goes, I can talk about price as much as you guys want, but I'm not gonna like self-guide the conversation. So if you guys have any specific questions for me, and I know like some of you guys are gonna be coming from Tenny's group, that's not gonna be the case for everyone. I'm not sure how many people are actually in the live, but I don't want to answer too many model specific questions simply because it's not my model to teach. But anything conceptually or price action wise that you guys want to pick my brain about, obviously I'm more than willing to answer those. Yeah, throwing a Zen. Now we're all nervous. No one wants to ask a question. Alright, well, you guys are at least thinking of something. I'll go and I haven't done my weekly review and kind of what I'm looking at for next week yet. So while we're waiting on questions, I will go do that. Okay. So when I do my weekly reviews for myself, I kind of block out each day. Even though I've already done a review for each day individually, this is where I, in hindsight, study the profile of the weekly delivery. Because even though on fundeds we can only trade intraday price action, on a personal account or an options account, I try to trade the weekly range when I can, and I haven't done that in a couple of weeks because of this range that we've been in, pretty much since the beginning of August. So while I'm doing this, again, I'm not going to just self-narrate price or like topics. The only thing that is going to make this better for everybody is getting involved with asking a question. Turtle soup / OB in a breakdown video. So, Jason, I think you're talking about how I look at reversal sequences. Is that what you're looking at? Like how I can possibly capitalize on like a turtle soup phase, or like an early anticipation entry in the reversal sequence. Yeah, you have some criteria. Okay, so when it comes to trading turtle soup is not something I will do very often. It's something I've definitely been back testing more recently, but I'll look for early signatures of reversal inside of like after that soup. So our highest confirmation entry is going to be the breaker. That's going to be where we get that full complete confirmation that we should be delivering in that direction on whatever time frame we're working within, right? Now, if I have a high probability draw before that, I'm going to look at things to set up in anticipation of that. Now, what does that look like? For our reversals, we have to know our reversal sequence first. What's the first part of a reversal sequence? Is we're going to have a range, right? We have to deviate from the range, right? Now the first dig into a range, if it's a reversal, usually fails. On continuations, a little different. Continuations, I look at wicks. Reversals, I look at candle bodies. Deviate from the range, right? And then that range low, that the deviation should get swept one more time. Now in those two steps, you have the deviation, so your early sellers or buyers are going to be participating in the market, and then those people are going to get stopped out. In that phase of price, that's where your first order block fails, which will create the breaker, and then gets souped. That soup should be your order block. And then everything after that is just easy. Now, there's two good examples of this this week. One of them is going to be on Thursday here, right? So if we look at Thursday, right, we have weekly high up here. But is it the same weight, a 15-minute swing to be prepped? Yes and no. That is, so waiting for a 15-minute swing to be prepped is ideal. It depends the range of the move I'm looking for, and I'll show you what I mean by that. So if we look at Thursday delivery and we look at Sunday / Monday high, right? A lot of people on Thursday got tripped up because of the wick at 9:30, right? Now, when it comes to daily sequences, we look at 8:30, 9:30, 10 o'clock is the typical manipulation SMR expansion windows. Now, how can I defer that the Judas that came at 8:30 or 9:30 is the actual Judas and not liquidity pairing for the Judas, right? If we're going to be offsetting orders, we're going to be taking some sort of session high for the first time, creating SMT. We're going to be creating fresh SMT. Most likely we're going to be creating an order block. When we look at this 9:30 candle, this 9:30 candle closes a wick, right? And then what did we do? We put two consecutive down close candles into sell side. We body closed with a large body, like relatively small wicks compared to the size of the body beforehand, right? And then we swept it out and flipped, right? So here's that sequence, right? How do I know that the bearish is the Judas? Every move needs to have liquidity pairing, right? So we took out two relative equal highs, but we left the draw where most people are going to be putting their stop at, right? This is your high. This is liquidity. All this, these three highs, this is liquidity, right? So we pair orders to take us lower for the actual offset accumulation for the day, right? your SMT got wiped on the top side up here to take us lower, right? After not taking really any session liquidity or a major liquidity pool for the day inside an imbalance over here. Put an SMT, put in your CSD at the order block. Now this 15-minute order block, when I have a 15-minute order block that gets swept, right, this is when I'll start looking at the lower time frames for anticipation entries, right? Now, some people's anticipation entries look different than others. You know, some people will use the first or second candle flip. Some people will use the order block. For me, I chose the candle body that closed below liquidity. So here's our sweep, here's our close below. So I chose this candle body and not this large wick. This one's just cleaner, and it also pretty much makes up the entire range of that candle. Some people are using the inverse fair value gap to interpret that range. Some people are using the 1 minute breaker. You know, these are all forms of anticipation entries, but the logic is that the 15-minute is putting in the order block. So the logic still comes from the 15-minute, but being able to anticipate it is just anticipating it on a lower time frame. Now, how could you also anticipate it if you actually want to trade the soup? Is using a variety of candle closures. So if we look at the 6 a.m. projections, which I use a lot for the morning session, the 4.5 standard deviations lines up with Asia low. So, you know, then we're just looking for reversal confirmation in the lower time frame. That was a good question. Did that clarify what I look for you? Did that help? Yeah, I also want to kind of go over, like, there is no best or worst PD array. If we look at like a reversal sequence, because that's essentially what we're all looking for, right? This pattern is everything that we trade, right? Whether it be to the top side or the downside. Now this pattern sometimes looks a little different depending on the SMT or when an order block is being formed. And I'll get into that too. So if there's SMT, it'll look like this and be kind of gross. Or it never actually takes this high that we put in initially, right? We've all seen this. Now this is a derivative of one of two things, which is going to be, one, they're putting in a high time frame order block, where to us it just looks like they're running in one direction, right? And that's actually what Friday was. And so if they're putting in a high time frame order block, that this pattern isn't playing out on the time frame we're looking for, or necessarily giving us that low time frame confirmation that we're looking for. Typically 15-minute, 1 minute, or 1 hour, 5 minute. It doesn't always give us this nice clean pattern on the low time frame. Sometimes it looks like this because of SMT. And that's why I put a huge emphasis on order blocks, right? Because that's what this was, right? If we look at this, right, there's no meaningful price action at all delivered between the open and 8:30. There's no meaningful displacement. There's no meaningful stop hunt. There's nothing, right? There's no imbalance either. There's nothing to seek here. There's literally, besides this, there's one. All right, there's one. And for me, that's how I visualize what is being delivered, based on like characteristics that most people will overlook. Most people will look at this price action between Thursday and Friday like, oh, we're giga bullish. We're giga bullish. Or even Tuesday to Friday, right? You had 3 days of grind, right? So when I see this close above this level here on the 15-minute, only one imbalance left. One, this stands out as the sore thumb. If I'm looking to buy, I'm looking to buy from here or here, right? These are the only two imbalances in price. I'm looking for projections to line up at these levels because these are the signatures that they left me on the intraday time frame that we use, right? This is way too small to be a stop hunt on NFP. You're talking, what, 30 points? 11 points. No. 15 points. It's not enough, right? And there's nothing else besides the new day opening gap. That's a possibility, right? As soon as I saw 8:30 stop hunt above the digital open, above this, the only imbalance from previous day range, we haven't dug into previous day range at all, right? And then we traded 8:30 into liquidity, into a bunch of low resistance liquidity. For me, this was just an order block being put in, right? It looks really clear there. So, and then if you want, you can go to the 5-minute. You have the S&T here. You have the 945 candle give you your S&T. But they don't make it always clean to get it in the low time frame. This is actually exactly what I showed you. So. What else? I will stay till we stop asking questions or 1:30 comes, whichever comes first. It can be as advanced or basic as you want. Don't get shy. That's it. No one else has a question? No follow-up questions on everything I just said? Can we go over the start of your trading day? What time does your day start? What are the first things you look for, etc.? Yeah. So, my day is pretty much just the AM session most of the time, right? I find the only times I'm really trading the PM is when I need to get my get back from getting the AM wrong, which is good and bad. But I'm not necessarily over trading. If I'm taking multiple trades a day, it's typically 2, right? 1 in the AM, 1 in the PM, just because of I know how much time it takes for my setup to form, which is a swing high, swing low, which is at least 3, 6, which is at least 9 15 minutes candles, which is every 1.5 hours, right? Which is about 1.5 hours. So I know if I'm missing the AM session, I shouldn't be trading till at least lunch, or preferably even the PM at like 1300, 1330, right? So what does my day look like when we have a no news day versus a multiple news driver or a singular news driver? Those 2 days look different. If I have no news day, I'm not sitting and looking at price to seriously consider in the New York session until like 9 o'clock. Right? I might sit down at 8:30 just to like look at like some things that we did overnight, put my fibs on my chart, but I'm really not looking at price with any serious consideration of engaging until 9:30. Now, why is on a no news day is that what I'm looking at? When I have a no news day, where's the volatility? Where's the logical time that I should expect a volatility injection that's either going to take me to a target or to offset orders for the daily range? It's going to be the only volatility injection we get for the day, which is 9:30. So why would I seriously look to consider anything before 9:30 is price action? If I'm trading New York, if you're trading London, London lunch, 5 o'clock, or London open 2 to 3 a.m. Those are obviously valid times because they're gonna have their own liquidity injections at those times. But for a New York session trader, if I have no news at 8:30 or 8:15, in the rare instance, I shouldn't be looking at price to do anything meaningful at 9:30. Now, Monday and Tuesday are good examples of that. Monday and Tuesday, I won't be looking at price till 9:10, and at 9:10, I'm going to sit down. I'm going to look at a few things. What did my overnight, my digital, my true day open? I'm going to put those projections on my screen. I'm going to look at 6 o'clock. I'm going to look at 6 o'clock projections. Are any of those projections nesting with key times or liquidity areas? So key times are, weekly, monthly open, daily open, daily close from previous day, high time frame liquidity levels, so like previous day high low, stuff like that. I'm looking for, some overlapping projections on those areas, and that makes those higher time frame draws or higher probability draws. Then at 9:30, I'm looking for 9:30 to give us the displacement into those areas to create our offset for the day, and then you look to trade away from those areas to other sets of nested projections and liquidity levels and stuff like that that are all nested. Now, if I have multiple news or multiple volatility injections for the day, whether it be 8:30, 9:30, 9:30, 10 o'clock, 8:30, 9:30, 10 o'clock, stuff like that, I'm looking for those time, like the same things at each of those time functions. So if I have an 8:30 news day, I'm not going to sit down till 8 o'clock, 8:10. But my pre-day doesn't take a whole lot of time. I know exactly what I'm looking for. I know exactly what to put on my chart to make it so I know what I'm looking for. And if I don't know, if none of the projections or key times look nice to me, I'm just waiting for the next liquidity injection. My focus is to also master New York AM. I mean, that's where you're going to get the biggest, fastest ranges, right? We get into trading for, the freedom, to be free of a boss, to work for ourselves and all that stuff. So the people who like sit in front of the chart all day to watch a 1 minute candles print, like you're just trading your you're just trading your job, right? You're just trading your employer. At that point, you're a slave to the market. That's not why we're here. At least that's not why I'm here. I'm trying to make $100 grand from 8 to 11 a.m. and go piss off. Can we go Tuesday 10 a.m. short? Oh, yeah. So realistically, this kind of goes into the sequence that I gave everybody. For me to reverse, I need to have SMT. At lows, I need to have a swing to reference at lows and all that stuff, right? So if you're looking at the hourly candle, right? This hourly candle that traded down, the only thing it took out was a failure swing. For me, that's not really enough to reverse off of. Now, we did hit 4.5 standard deviations of the weekly open. So I was honestly a bit confused with the displacement that came overnight. I believe this was on like tariff talks from the previous day or something like that. I forget. But realistically, I looked at this leg of price and I was like, okay, we had the 6 a.m. candle deliver a fair value gap, or pretty much like that swing of price was nested with monthly open, and we traded it below it. So I was really just looking for the continuation to put in that swing. It was me knowing that I wanted to be buying the week, really, and in order to do so, I needed a reference point, right? At this point, there's no high time frame swing until, how many points is this? 300 points away. So I knew we needed to make another dig lower. Now, we had 2 gaps, and then I believe we just had SMT of which one we used? Yeah. So we really just had PD Ray SMT, right? So NASDAQ traded into the top gap. This is ES trading into the lower gap. So there you have your SMT, and then I really just used my framework where, okay, if like where's the meaningful move, right? In this leg of price, I'll go to the 5 minute. I should put this on replay to make my life easier. Okay. In this leg of price, and we'll mark off 7 a.m. because that's realistically when New York session technically starts, right? In this leg of price, where is the first meaningful move that we could look as the kind of Judas swing for the day? Right? This is all liquidity being built, right? This is all liquidity being built. So, if this is all liquidity being built, and I haven't actually made a move yet for the session, right? I need to pair those orders, right? When I pair those orders, that's this candle, and here are your consecutive candles going up. What is this? This is your order block. When I'm looking at for an order block to be formed, I'm looking for large wickless candles. If you find a wickless candle, top and bottom in liquidity, expect that sweep and just to reverse. That's as clear-cut manipulation as it gets. But here's where your first displacement comes in. It's all to the top side, right out of 930, all to the top side. Right. So this is what I'm looking at as my order block. Right. Then you can go down into your lower time frames and start hunting a setup. Okay. Here's my 10 o'clock. My 10 o'clock candle opens higher, no candle body, and has a swing low right before it for a breaker. And this candle created the SMT. That's it. What do I target? There's your target. 2.5. That's it. Now, why would I target 2.5 and not this low? Right? Because we already took out liquidity for the day. Actually creating SMT. So what could we logically expect our asset not to do? Our asset should, in theory, not take liquidity again because it already has, and an asset that previously failed should. And ES failed the first time and then took it out later. So that was how I framed the short, was simply knowing, okay, where's my first meaningful displacement? I don't remember what the news schedule for that day was. That could have something to do with it, right? If 9:30, if we had no significant displacement, no news, and 9:30 delivered higher, I'm looking to take that away. But at the same time, I wasn't looking for this low to get taken. Yeah, if you really go into like back testing and you look at the news schedule for the week and you put 8:30, 9:30, 10, 10:30, depending on what the news looks like for the day, onto your charts, you'll see this over and over and over. It's the premise behind data highs and data lows, right? If your data low creates the breaker low, you're getting faded every time. By me at least. I might be wrong 20, 30, 40% of the time, but when I take my 2, 3, 4R from that trade, it doesn't matter if I'm wrong 50% of the time, 60% of the time. I think I'm still new to this, so I missed it while it was all playing in front of me. What I'll also tell you is, you don't need to, that's fine, right? Not every move needs to make sense for you. If you missed Tuesday, the short on Tuesday, and the short on Friday, those are absolutely 100% okay trades to miss. 100%. And the sooner you can come to terms with um, accepting that you've missed a trade and you don't feel the need to get into a trade, or you've just lost a trade and you immediately need to get back into the trade, like buying your stop loss type of deal, as soon as you can get rid of that, you will progress faster, right? You really only need one trade a week can change your life. If you wait all week for a trade that you know you're gonna win 70% of the time, so that means you're winning 3 trades a month, right? In theory, you're winning 3 trades a month. Say you have, I don't know, if you win 3 trades a month, you have an average RR of 2. We'll call it low, right? Average RR of 2. That's 6R for the month, or 4R for the month. You have 200 grand. That's $8,000 a month. You can do that with one account. So this idea that you need to like be able to foresee like every move, and just because me or someone else you look up to is in a move that you should have caught it, no, that's 100% not the case. Like even people who have taught me, I'll be in moves or have a bias that goes directly against them, because the market prints both sides simultaneously all the time. You know, a lot of people will say price is obvious, this and that. It is rarely obvious to everybody. Rarely. And that's how it's designed to print. So, don't worry about the trades I'm in. Don't worry about trades other people are in. Like, if you want to learn from people, learn the ideas and thought process and behaviors they apply to the chart. But don't worry about what trades they're in. Right? If you want to look at what they took after the fact, so you can try to emulate that and see if you've missed pieces of information. But just because someone was right and wrong doesn't mean, like, you and I could both do opposite things on the same day, and we could both be right. Being right just means that you're following the process that you've outlined for yourself, and that over the course of your data that you've collected is profitable in the long term. Being right is just following those. And like that's actually something that took me a long time. I'm very competitive by nature, very impulsive by nature. I always want to be right, right? I always want to be right. When I was younger, you could tell me the sky is blue and I'd fucking argue with you. Pardon my French. I would, just for the sake of it, So that definitely hindered my trading, because you can't be right 100% of the time. It's not possible. What else? I don't think I've ever seen that emoji before. What is that? How do you build the bearish buy for Friday? Okay, so when I say 8:30 and 9:30 to 10:30, 10 or 10:30 is not how I developed the bearish buys for Friday. How I developed the bearish buys for Friday is understanding that the market is setting up future moves presently, right? So I actually said, where was it? I think I said somewhere around like 2 or 3 o'clock on Thursday that this entire move above this high was liquidity, right? And I actually got laughed in like the little group chat I sent it to. I got laughed at. I said all this was liquidity, and I actually just took you guys through that, Raven. So if we look at Thursday and Friday delivery, I'm gonna take off these key opens here, so it's a little bit cleaner. Let me just clean this up a little bit. When we look at Thursday and Friday delivery, right? There are 3 imbalances in the entire price leg, right? Look at down here. Look at this entire leg of price on the 15-minute chart. There's no imbalance until you get to here. Then we print another imbalance here, which gets partially closed. So this is technically, for me, if this is 50%, which I believe it is, so that for me, that's mitigated. I'm not going to use that as a reference point. And then you don't make another imbalance until here. That's not mitigated. So you have two imbalances in this whole leg of price. Here and here, right? Price is going to do one of two things. Price is either going to seek liquidity or seek to make itself efficient, seek an imbalance, right? Those are the only two things it's going to do. So it's either going to consolidate or expand, right? If I look at this leg of price, right, and I'm looking at it, where is the only thing I can target? The only thing I can target is external highs, which I've outlined over here. And I also have key liquidity, key projections from the weekly low, right? Or it's going to seek an imbalance. Well, it can't seek this imbalance because this imbalance is only 11 points away, and NFP is not going to manipulate 11 points and go higher. Had price traded down from 830 to say 9.15 into this imbalance, and 930 souped it and went longer, I would 100% buy that to all-time highs. Anyone who's in my Telegram knows that I've been looking for all-time highs since like Tuesday or Wednesday, or Tuesday or Thursday. I think Wednesday was straight chop. But I wasn't looking at it based on time. I was looking at it based on, okay, if I look at this delivery, right, same thing. If I look at this delivery, right, and I know I have 8:30 news, when am I going to start looking at price? I'm going to start looking at price at 8:10. Okay, at 8:10, I'm going to plot out key projections. For me, that day, right, those key projections weren't even on the chart yet. For the moment, I was looking at this, right? I was looking for price to possibly get down here. But that still isn't taking me into where I ideally want to buy from, which is all the way down here, right? Then 8:30 puts in a wick, takes out liquidity, and not even all of it, and delivers us in the buy side, reaching projections after that wick was put in. 9:30 soups the high, 9:45 creates SMT, 10 o'clock distributes lower. 8:30 manipulation, here's our order block, 9:30 soup the order block and create SMT at 9:45, 10 o'clock distributes. Earlier you mentioned one of your confirmations is an OB sweep. Why is that? Especially near an area of buy side, sell side liquidity. So that that filter, right? I use that as a filter. It's of gauging price. If I'm looking for a reversal, I want an order block to be put in, right? I want visual displacement that price is going to be running in the opposing direction from the real move beforehand. Now, why is that? Is because of order pairing. I want to see all this volume come into this level and then just get immediately displaced through. Right now, if it's a continuation, I'll look for a wick, right? If it's a continuation, like look at this wick versus the close. Like, so here's liquidity, right? Here's the close below. I'm not always looking for the order block. The order block is when I'm looking for a reversal, not a retracement. And if a order block gets souped versus not souped, I would go study those probabilities, right? That's just something you have to go look at. Just so you know, the OB can also be the sweep, right? That's technically what an order block is. It is the sweep. But I would ideally like to see the following candle run its high. For me, the Friday buys came from the weekly profile. Yeah, 100%. If you have Tuesday low of the week profile, Tuesday low or high of the week, it's very likely that you sell off or buy up on Friday to make the wick. Right? You can get to the same conclusion using anything really. I say this all the time. Like, we as traders who use quote unquote smart money concepts or we trade ICT, we very often talk down on other ideologies, right? Support and resistance, supply and demand, blah blah. But I promised you, right? I promised you, if you find traders that attach legitimate logic to those concepts, they can all be used profitably, right? The difference that ICT has brought to trading is the logic behind each of these like ideas, right? You know, there's no logic behind a bullish or bearish or a pennant or a triangle and stuff like that. Those are just shapes that show compression, and compression makes the move, right? There's no logic on which direction it should go with a high probability, right? So, you know, he took those concepts, right? Like order blocks, breaker blocks. Those are all just renamed ideas from other ideologies, and he attached a specific logic to them. That's the only difference, and that's where it sets itself apart from the rest of it. Is the logic? It's not the names. It's not the lore and the conspiracy behind the algorithm. It's simply the logic he attached to the confluences. So you and I could trade. I could trade retail nonsense, and you can trade ICT. But every good model is going to be in the same move. Every good move, every model is going to be. What time frame do I use for FVGs? I will look at. I'll look at many time frames. Periodically. It helps me visualize like market direction. So I'll look at the daily chart after the close every day, just so I can visualize what the week has done so far. But as far as where I'm looking to target, I'm really not looking to target imbalances that aren't a daily liquidity draw, like an external to internal liquidity draw, or on the 15-minute for a continuation. And that's like another thing I talked about, recently. I used to get really like crazy with confirming my moves or getting me out of moves or stuff like that with. And don't get me wrong, intermarket analysis definitely helps when you're a long-term investor, or if you're trading currencies, which I like. That's where I got my Starbucks currencies. That's why the dollar was so prevalent in my trading, was specifically for currencies. Because if I can measure the dollar if I'm trading majors like EU, GU, and then I can look at EG for determining which one of those two is stronger or weaker, then I can make trades based on that. But when you're trading futures like we are, and not currency futures, but equity futures, those things aren't really going to help you. So if you want to look at multiple time frames, go ahead, but be selective with what information you're taking from each. Right? Too much information is going to push you into either you're going to be cutting trades because of too much information, or you're not going to be able to get into a trade because of too much information. So there's always going to be one piece of conflicting information, even if you're having one time frame. Right? There's always going to be conflicting information. FEGs in the cloud, yes, 100%. Yeah, absolutely. Yeah, and again, that's just, being able to frame a low time frame trade based on a high time frame draw, right? If FEG is in line with the liquidity pool, guess what? That liquidity pool is just internal liquidity, just a fair value gap, right? But you have, if you can visualize that, and that's like where people get lost. It's translating the logic to the lower time frame. The audio is bad. Is anyone else having that problem? Some OBS having that problem? You saying like it's quiet? Or is it bad? Have you guys been hearing what I've been saying or no? sounds like I'm talking in a can. Yeah, the echo I can't do too much about because of the room I'm in. So I do apologize about that. I need to get like some soundproofing for the walls. Yeah, I'm sorry. There's a mixed feedback about the audio. No, I could just develop minutes ago. Software related. Is it still echoing? One second. Is it better? Did everyone hear what I was just going over though? Despite the difficulty? Yeah, I'm going to start with the echo. Okay. Next question for you guys. My narrative and bias comes from weekly profile market structure, which we'll find out in upcoming weeks. Yeah, I mean, as long as you create an approach that, when you sit down, you're completing the same steps over and over, looking for the same things over and over, and executing based on the same structure over and over. That's the definition of a system. And then you attach risk management to that, and that's it. You cut out the bullshit between each of the good setups, and you're beating 98% of everybody else. We all get lost in between the good setups. You cut those out, it's almost impossible to lose. That was a very bold statement, I know. Why was the inversion FPG that you placed not respected? What was your initial narrative when you placed that? When, on what day? Or what was I referring to? Are you talking about on Tuesday? What I just went over? At the low of the week?
pardon if I butcher your name, but let's say, were you talking about the Tuesday low of the week when you were asking about that inversion fair value gap? Or are you talking about this one in Thursday that you see here? When you give me some clarification to get back to your question, do you wait for a certain number of minutes before taking a trade after the 9:30 open? It depends what the 9:30 open gives me. If 9:30 gives me, displacement into a liquidity pool that matches up with my projections, sometimes I'll trade the soup. It's something I'm trying to do. It's actually, what day was it? It was Wednesday. That was actually where my bad day came on Wednesday, because Wednesday I actually traded 9:30. Let me guess, this is digital open. I bought this. I bought the digital open on this day. Okay, do this. I need to put my stuff back. What was it, this? I had projections. Yeah, it was this. I had projections that lined up with the retracement. I had the imbalance from the overnight session. I had the digital open. The delivery here made the price efficient. I had pretty much everything I wanted, and I believe I also had projections landing on the digital open. Yeah. So I bought 2.5 and put my stop below at 4. I believe I used the 6 o'clock. I either used 6 or 8:30. Where's 8:30? This is 8:30. Let's put both on. Yeah, I bought this 2.5 and I have my stop below. Using this as price should not be coming back into this range, so I used the top of this range as my stop. And I bought this twice on 2 accounts and closed it prematurely. Once for a loss, once up here. Because it is a newer entry method that I'm trying to use, right? And that was really where the only red day I had. Even though I bottom ticked the move for that particular leg of price. But no, I don't need multiple candles. Like some people wait for the first 5 minute or 15 minutes. If you want to trade the closure of the 9:30 candle, it definitely gives you more information and a higher probability, less volatile period of price to work with, but still a large enough range to obviously make real money. I meant the other one, the right above the SMT you sent. Yes, the Thursday one. That wasn't on my chart to use as an inversion. This was on my chart to annotate the only point of price where I would have looked to buy from, right? So look at the range from this, right? Straight down, straight down, straight down. Look at these closures. Look at the closures until we get here, right? That's something you should know. If we have a whole leg of price and they leave one imbalance in that whole leg of price, that fair value gap should 100% be on your chart. Now, when we broke below it, I expected to use it as inversion, but we already traded into Thursday range. We didn't necessarily. I would have ideally liked weekly or monthly open, but I wasn't looking to necessarily use this as an inversion. I was looking at this as an area where we could possibly buy up from. So if in this scenario, right, if I got to this area right here, so say in this situation that we didn't deliver this higher, if we could just erase this move, I'll even go back further and draw it for you guys. If we can go here, right, and I can deliver price, I don't even know how to draw it. Hold on. Let's figure this out. Right, if I can deliver price here, right, and we deliver price lower, and then it wants to give me an order block, which I'll just draw. Say it wants to give me an order block like this, and then the next candle it wants to give me this. Draw. Say it wants to give me this, where it soups this low, and then we take out this high. This for me, this is the order block. This is changing the state of delivery, right there. Assuming we close above the wick on the top. Put some wicks on that for you guys. If we get a signature like this at this level, and we haven't manipulated higher, I'm buying this candle closure every time. Even if the swing point to make the breakers up here, or we have an inversion above us, or at this point a fair value gap above us because we haven't inverted yet, as soon as I see this candle closure like this, and I have SMT at this low, or SMT from over here, if that's a session or daily liquidity pool, right? I'm buying that candle every time. And most people will wait till this swing is taken out 100 points later. But that's knowing the sequence that you're looking for, right? That's what that is for me. Yeah, I wasn't looking for that to be inversion. That was just a key area of price because it was the only imbalance in the whole day of delivery. You look at the entire Thursday range, there's one imbalance in the 15-minute chart, and that's it. Price delivers and keys up reference point for future delivery presently. I called that Thursday's delivery after the range high, which is this black line here, was all liquidity. How did I know that? Because there's no imbalance. That's it. If price is not going to be seeking an imbalance, it's going to seek liquidity. Where is liquidity beyond the imbalance? Where's the first swing low? What else? Some of these are some pretty good questions, I'm not going to lie. No? Nobody else? I'll give you all a couple minutes. If that's the last one, I'll wrap it up there. Get on with my Sunday football. right, gang, that is gonna wrap it up. I did hear your guys mentioning the echo, so I will be getting some soundproofing for the area I'm working in within the room. So I do apologize about that. But thank you guys for everyone who tuned in. I hope that those of you who ask questions, I satisfied those. I definitely recommend rewatching some of the things I said. An AM live stream. I don't know that I'm 100% comfortable enough trading live yet. I did with Bray. You could watch that on Bray's channel. I had some fun. But right now my focus is definitely going to be on myself, on what pays me for now, while I really hammer in my confidence and all that stuff and what I'm trading. I do have the results, but still sitting in trades is at times uncomfortable for me, right? I have a background of always over managing my trades, and sitting in those and possibly being wrong on stream is not something I necessarily want to expose my trading and my decision making to yet. Definitely in the future, right? I definitely want to have students of my own, and doing things on Front Street is definitely something I admire and want to be able to do for people who want to learn. I just don't think I'm at that point where I can be comfortable enough to do, and it's not because I can't trade, it's because of the emotional side of it, right? But it'll come over time. But thank you for everyone who tuned in. I'll do these every so often, whether it be a Q&A or a detailed session. Will you upload this after the stream? I will. Understandable, G. Yep, appreciate you. But if that's it, thank you guys for tuning in, and y'all enjoy the rest of your weekend. I'll talk to you guys soon. Of course. Peace out, guys.